So, hi everyone. My name is Jordan, and we are continuing with our series about chart patterns. And in this video, we are going to be looking at the head and shoulders. So, we are going to be looking at this pattern right here you're seeing on the screen, and it is what we call the head and shoulder chart pattern. Here we have a shoulder, here we have a head, then here we have another shoulder. So, this pattern occurs in a clear uptrend, and it is a bearish reversal signal. It signifies weakness in the current trend, and therefore we anticipate a reversal from this current uptrend into a downtrend. So it is one of the most powerful chart patterns ever traded, and this pattern is only confirmed after the price breaks through the neckline, and the neckline is the support levels that is created by the two shoulders. Okay, so like you're seeing right here, you see that this is the first shoulder, it formed a support here, and this is another shoulder, it formed a support level. So after price breaks the neckline break and there is a retest, it is a powerful short signal, and we can trade this pattern in two major ways. The breakout strategy we have been looking at in different videos, and then the break and retest strategy. Okay. So the head and shoulder chart patterns looks like this exactly. So the price is always on a clear uptrend, okay? And then after it forms a short-term wave which comes down, breaks, and fails to go low, then it creates another high, but specifically higher than the previous one. Okay, then after there, it comes back to retest this previous level of support. So after retesting on it, it goes high but does not reach this previous swing high, and then it comes to break through this support. When it breaks this support level, that is what we call the head and shoulder chart pattern. Okay, so what we anticipate is that the price will keep dropping down, or else it will come and retest on this support level to become a resistance, and then it will continue in a downtrend. So when you are drawing this neckline, so for example, you can see that sometimes the neckline will be perfect, and then sometimes it will not be a straight line. So we shouldn't anticipate that it's supposed to be a straight line as such, because sometimes you can get something like this. And then you can see that there is something like a trend line being broken. So in most cases, when you look at this head and shoulder chart pattern, there is also an anticipation of a trend line break and retest. You can see that the price is coming from a clear uptrend, and in an uptrend, when you have a trend line like this, the price comes and bounces off a trend line. So in the head and shoulder chart pattern, you can see that now the price breaks the trend line, it tends to retest it, and then it comes to break. So this becomes the neckline. And you can see that this is the shoulder, and this is the head, and now this is another shoulder. So even trendline traders would also be able to spot, but they will not call it the head and shoulder chart pattern, as you can see. So we are going to be looking at candlestick charts to be able to spot out. So our target profits is from the point of previous swing low. So in most cases, we shall be getting profits in phases. So for example, here we can put our take profit 1, then here we can put our take profit 2, and then at the base we can put our take profit 3. So what happens is that the price might come, break, then test, and then hit take profit 1. Then it makes a correction, or what we call a retracement, and then hits point B. That is take profit 2. Then after there, it goes back to make a second retest on this level of resistance, and then it comes back to pick out our level 3. So here you have to be steady in a way that after you've been shut out at point 2, you could be able to also get a wave that goes to correct, or that goes to retest on the neckline. And after the neckline retest, and then you get a candlestick pattern, you can also still make a short trade because of this double retest. Okay. So the trading strategy, we are going to be looking at how to trade this head and shoulder chart pattern, and it's one of the most common chart pattern, though what I've come to realize in the market is that you can find that the price is on a clear uptrend, okay, and then you get this head and shoulder pattern. So here we have our neckline. But then when you look keenly within the market, you could find that even right here, there was some little bit of a short there's a short term also head and shoulder chart pattern within that one. So sometimes you have to be steady in a way that you could be able to spot both. So when you look at the major view of the chart, you could find that there is a very big head and shoulder, and then there is also this tiny one. So when you look at the chart right here, this is a candlestick chart. So the other time when you are using line charts, things look to be so perfect. So here you have to anticipate life. This is 1. Then there is a retracement. This is 2. Then there is a retracement. So now here you could consider this. That is what I've been talking about. Or if not that, hold on a little. So you can see that here we have a wave up. Then we have a retracement. Then we have a wave up. Then we have a retracement here. Then we have a wave up. So that is a complete pattern. So you can see that now that is a head and shoulder. But still, when you look at another person can come and ignore this one and then just connect it to this one and then here. So this also becomes a valid head and shoulder. So we are having two pieces here. We have one, then this, then this. You see? So here, this person will be having their neckline break. So this is their neckline right here. And now this is a retest. So you're having a short-term trend. Are we clear? It's the first shoulder, second shoulder, third shoulder. But now you can see that according to the person who drew the image, for them they're saying that this is where it is. But now to me, I'm saying that yes. How about this? You could say that now this is a retest. And then after this candle retest, here we have an entry point to catch the wave down. So that is what I'm saying, that you should be so vigilant according to your trading style. Okay, and then you should also be able to spot those inner patterns. But now if you're looking at the major ones, you could also be able to spot something like this, something like that, and then this would become the neckline, of course, something like that. So here we are waiting for the price to come and break and then retest maybe, and then we catch the wave down. So we are going to be looking at how to trade this head and shoulder pattern. And then on the screen, you can see that we already have our head and shoulder pattern right here. But still right here, you can also still spot that we could make a head and shoulder right here. So you can see that here the price made a wave high, then it made a retracement, then it made a wave high, then a retracement, okay? Then here we have a wave, then here we have a break. We have that blue candle retesting, and then we have a small short-term trend. Okay, but still, when you see that the market is fluctuating a lot, I do not advise trading. So for example, right here, you can see that the market is having a lot of big swings, but if you're skilled enough, you can still go in for it. So here we have, and maybe on the former chart here, it was not a clear uptrend, but right here, you can see that here we have a clear uptrend, series of higher high, and then higher low pattern. So here we have our first shoulder, we have our second shoulder, and then we have the neckline break. So when you look at the chart right here, you can see that here we have a neckline break. I don't know if everyone is spotting things like I am. Here we have a clear uptrend, series of higher high, and then yellow pattern. So here we have our first shoulder, we have our second shoulder, then we have a neckline break here. So here we have a retest, and then here we are expecting to go short. So after going short, you could break even according to our trading style, because we agreed that when you're in the money, you have to pull your stop losses. So you can see that here the price went back, make a second retest on the neckline, and that is what I said. Second retests on the necklines are always very strong signals to sell. So you can see that now the price comes in. And you can see that if this was our first target profit from from around here, we could have been able to get some profits. So you could see that right here we have a neckline break, then here we have a retest, and then we have a doji right here. So this was going to be our entry point, and then below this right here around there, that was going to be our first take profit. So when the price hit our first take profit, it went back, it made a retest on the neckline. So here we expect to make a short trade. So we just wait for candlestick patterns, and we have a lot of dodges. So we could also make a sell stop order, and then our target profit was here. Okay, this level of support here. This was supposed to be our target profit. So we shall be studying more in technical analysis. This shouldn't worry you, okay? So, but all in all, what you have to know that every time you see a clear uptrend and then it ends into this head and shoulder chart pattern. So for example, that is our pattern. That's the neckline. When the price breaks, it will come and retest. After the retest, the price will come and seek these previous levels of support. So for example, this is the first level of support. And then after there, it will come back to retest on the neckline, and then it will come back to seek this second level of support. So it might not come down straight in a straight line, but it might come in series of a downtrend like that. Okay. So when we are going to trade this head and shoulder chart pattern, we have two possible things we can do. Number one is to wait for the neckline break, and that is a key factor. Whether you want or not, you will always have to wait for a neckline break. So if this is our pattern, and then maybe say here we have our neckline. So when the price comes to break and then it breaks the level, what we do is that we can wait for a candle that closes entirely below the neckline. Okay, when this candle closes entirely below the neckline, what we do is that we make a short trade. That is what we call the breakout strategy. In the breakout strategy, you just wait for a neckline break and then a candle that closes entirely below the neckline, then we make a trade. So in the break and retest, we wait for the neckline break, okay, and then wait for a retest, and then wait for candlestick pattern, and then we could be able to enter. So for example, right here, you can see that this candle is the one which broke out of the neckline, but the following candle is the one which closed entirely below the neckline. So after this candle closed entirely below the neckline, we could make our short trade from here, and then our target profit could be down here on the next level of support. But you can see that the trade did not trigger us because we're using a limit order. So we wait for a retest. After this retest, you see that here we have a doji. And on that doji, we have to wait for this level of support. Okay, that is our take profit 1, and this one becomes our take profit 2. Let us look at the next chart and we see. So here, I tried to zoom in so that everyone could be able to see clearly. And you can see that we are having a clear uptrend right here. Okay. So after this first shoulder formed, here we formed the head. And then here we have a second shoulder. And then here we have neckline break. So here on the neckline break, we can say that we are waiting for two things. Number one, we are waiting for the price to come and retest on that neckline so that we can make a short trade. But before we do that, sometimes the price will not make the retest, but still it will come and seek these levels of support. You can see that here we have a support level, and you can see that even here we have a support level. So when the price breaks the neckline right here, we have to wait. So for example, right here, the price broke, okay, but this was supposed to be going back to make a second shoulder. So here the price broke through right here on this candle here, but this candle did not close entirely below the neckline. So even here, the same thing happened. The price is trying to pierce through the neckline, but it was not able to break through. So the pattern is not yet confirmed. But after this doji closes below that neckline, or actually even this candle could be a best one if you fear the doji, this one here. If that candle, you can see that it closed entirely below the neckline level. After closing below the neckline level, what happened next? The price pushed down to this level of support. Okay, so you can see that on this doji now, after it has closed entirely below the neckline, we could put our sell stop order and then target a few pips below the support level. So this is the support, but we have to put a few pips below the support level because the price will always try to pierce through the support. Okay, so that is it. We have to, as a recap, is to see that we are in a clear uptrend. Sometimes it couldn't be so clear, but it is a long-term uptrend. So the price pushes high, it comes back, retests on this previous level of support, and then it creates a second shoulder, and then it comes to break it. So here, when we connect these two support levels, this support level from the first shoulder and the support level from the second shoulder, we create what we call the neckline. And we go in, when the price breaks the neckline, we wait for a candle that closes entirely out of this neckline level, and then we make a short trade. So for example, this was our candle which closed entirely out of the neckline. We could put our sell stop order here, and then we put our stop loss, and then we put our take profit 1. Okay, and then take profit 2 would be right below here, next level of support. If that doesn't happen, what we do is that we wait for a retest. When the price comes and retests on this head and shoulder chart pattern, what happens is that it will create a candlestick pattern and then finally makes a short trade. If it doesn't make a short trade, it is okay, things happen. So then we wait for a retest and then we go short. So here, and then sometimes we still say that when the price creates its head and shoulder chart pattern, when the price creates the head and shoulder chart pattern, so for example right there, and then it breaks, then retests, it will come and meet our first level of support. After meeting the first level of support, we still have a second level of support. So the price might go back to the neckline, first retest on the neckline, and then comes back to push onto this next level of support. So you should also put that into consideration. So for example, right here, you can see that our first level of support has been taken out. Okay, you can see that here the first level of support has been taken out, and the price is bouncing off, is creating a series of an uptrend. So it will come, retest on this neckline, and then still it will go back and break through this level of support and then test the second level of support. So that is how we trade the head and shoulder chart pattern. Thank you so much for watching this video, and I'll see you in the next video. My name is Jordan. Do not forget to subscribe to the channel for more videos like this and for support. Bye bye.